And Howard, let's talk first of all, because we focus so much on the debt ceiling. We'll get there, I'm sure, about earnings season, because the surprises have been better than normal, right? I think 84% of the companies that have reported have surprised, and earnings growth has been pretty good, 16, 17%. Top line growth has been pretty strong as well.
Yes, I think, Matt, the economy's not getting enough credit for how good it is. There's a lot of talk about slowing growth and potential this or that, but the reality is, outside of housing and construction,
it's slowing, right?
It's slowed.
Last quarter was 26% growth. This quarter, 16 so far.
It did slow. The question is what happens in the back half of the year. And now that we're through the Japanese supply disruption, we're recovering from that. The spike in the price of oil is largely behind us. We're going to see a nice ramp up in auto production and aircraft production. We're seeing strength across a broad variety of industries, really outside of housing and construction and finance and the public sector, which is shedding jobs. The rest of the economy is in very good shape, and that includes chain store sales, retail.
Hey, Howard, let me jump in, because earlier our reporter Suzanne O'Halloran broke down what we're hearing from some of those multinational CEOs, and she mentioned 3M, the CEO, saying the world economy has hit a slow spot. And then we heard from the UPS CEO who said the U.S. is extremely sluggish. So it's not all roses out there when you talk to a lot of American CEOs and those who run very big global companies.
Yes, but I think both 3M and UPS, in their own forecast, are calling for an upturn in activity no later than the fourth quarter of this year. I think in the case of 3M, they were caught by rising raw material prices was part of their problem. LCD lack of demand was another. And so I think that we have to take it all in the aggregate. And in the aggregate, corporate earnings are doing better than expected and by a greater than normal amount.
All right, hang on, guys, for a second. I want to head out to Cris Valerio. You've been waiting for those Amazon numbers to cross, and Cris, they are crossing, and certainly the EPS number here looks like a beat, but lots of numbers to go through.
It did. It beat the estimate there. So second quarter EPS 41 cents a share. We'd been expecting 34 cents. To give you an idea, that is, of course, the adjusted EPS. So certainly 41 cents, 34 cents was expected. Want to run through some of these other numbers that are coming out here for you. So third quarter revenue at $10.3 billion. This is, of course, the guidance that it's giving, the estimate that it's expecting. Third quarter revenue, $10.3 billion to $11.1 billion. That is ahead of what I would have written here, certainly as the estimate. Some other numbers for second quarter EPS. I should say numbers. International sales, $4.5 billion. Second quarter sales total, $9.9 billion. Amazon also reporting that North American sales at $5.4 billion. So these are some of the numbers that are coming across as we're going through this number. I want to go through the report, get a little bit more, Carol. Also, just want to point out one other number that just came out. Amazon.com seeing third quarter operating income at $20 million to $170 million. To give you an estimate, we've been expecting $311.7 million, so that's significantly lower. And that was one of the things from several analyst reports that I had been reading. They said, watch that operating income forecast, because Amazon has been investing a lot in its digital platform. There's been a lot of driving of the margins to a lower number, so they were saying, watch that operating income, and that operating income guidance coming in much lower than had been anticipated. Again, to run that number through your head, third quarter operating income guidance at $20 million to $170 million. The estimate, $311.7 million. So certainly investors have to like what they hear there. And I'm going to take a look here at after hours trading just to see, and you can see a bump up a little bit in the stock. We'll certainly see if that continues. And again, we're going to go through this report, get more of those numbers, give you a little bit more context to look at. And again, the margin number is going to be something really important too. And I'm going to look through here and try to find that for you, Carol.
Cris, thank you so much. Tracking those Amazon numbers. Let's go back to Howard Ward. So, I mean, there's some numbers, Howard, from Amazon. I mean, there have been a lot of earnings out. In general, you're pretty happy with what we're hearing then?
Yes, I really am. Again, whether it's technology, industrials, energy, consumer discretionary, by and large, the results are very positive, and I think the best results have been registered by the technology group. And I think you see that in the stock prices of a number of the big tech names, whether it's Apple, Google, EMC, IBM, Microsoft, Qualcomm. Very solid group of stocks, very strong earnings, great balance sheets. I think that's a good place to be for the balance of this year.
What do you think about, Ford came out this morning, great numbers, but part of it was due to the slowdown in Japan, right? They're selling more of their smaller cars because of the slowdown in Japan. All the U.S. car makers have gotten pricing power because of that. Are there some companies that you think will bounce back to a little bit less strength when Japan comes back online?
That's really tough for me to make that call right now. I do think Ford's numbers were very solid, and I think Ford is still in a good long-term turnaround position. I think Alan Mullally's doing a great job there. And I don't own
It's
Ford.
amazing the pricing power that these car makers have, isn't it?
Well, it is. And, the quality is much better than it used to be. I think Ford and General Motors are both turnaround stories in the making and probably will be good long-term investments.
Howard, it's Julie here. I want to get into what's going on with technology a little bit. You mentioned a couple of those tech stocks, and I've been watching them. Earnings, like for many of the other groups, have been coming in better than expected. Apple, I'm just noticing, did close above $400 a share today, 403.41 to be exact. I know that's one of the stocks you like. It seems like almost everybody likes it. Are there any risks, though, when you look at Apple? Are you at all concerned that, as we continue to see unemployment at these levels, et cetera, that people are going to be less willing to shell out the money for their devices?
Well, I don't think that for the next year or two, I don't think there is a tremendous amount of risk in Apple. Apple, ultimately, I guess you could say, is a consumer electronics company, and therefore, as it broadens its customer base, inevitably prices are going to be coming down at some point. But right now, they're in such a sweet spot with new products, with the iPad, with new carriers for their iPhone on a global basis, that I think that the strong profit growth is pretty much going to be baked in there for the next couple of years. Unless, of course, we were to have a serious global slowdown, and I don't think we're going to have that.